Available inventory of homes for sale continues to fall at the end of January. This is a combination of very few new listings and a bit of a surprising uptick in demand from buyers. Low supply is helping to buoy prices, which were falling in the fourth quarter. So the question is, have we already seen the bottom in the housing market? Or is this a temporary blip, a red herring before the inevitable recession hits or interest rates climb again? Everyone has their view, of course. But here's what the data is saying right now. The one thing to keep in mind about measuring the data right now is that so much of the housing activity in the U.S. happens in the first and second quarter that you can really already get a lot of clarity for the year. If you are one of the folks, though, that is holding a bearish view for housing in 2023, the early data is actually already working against you. Every week, of course, Altos Research tracks every home for sale in the country. We analyze all the pricing, all the supply and demand, all the changes in that data, and we make it available to you before you see it in the traditional channels. If you aren't using Altos market reports with your clients, your buyers and sellers, right now might be a good time to step up. Go to altosresearch.com and book a free consult with our team, because everyone is worried about what's happening right now. They need you to help them see clearly. There's a link in the description below to connect with us. The data we cover here in this video is national in scope. And at Altos, we track every zip code in the country. So join us to dive in for your local market. I'm Mike Simonsen. I'm the founder of Altos Research. And here's what we know as we wrap up January, the first month of 2023. Available inventory of single-family homes declined again this week to $466,000. That's 1,000 homes. That's a little bit of a surprise, though not entirely unheard of for late January. So in pre-pandemic years, it's sort of normal for inventory to bounce up and down each week in January and then settle at the absolute low point for the year in the first week of February. So that'd be next week's numbers. Since I've been anticipating this year return to more normal pre-pandemic patterns, we would expect inventory to hit the low next week and then climb reliably starting in February. Except that this year, inventory hasn't been bouncing in January. It's basically just been falling each week. We had one little increase a couple of weeks ago. We now have fewer homes on the market than at any time since the end of June last year. And in that sense, the inventory curve for the spring of 2023 is starting to look more like the pandemic years, each of the last 2 years, with inventory still falling into February and maybe March. Very few sellers, plenty of buyers to gobble up what is available. Inventory is 71% higher than at the peak of the frenzy last year. We have more homes and less buyer competition. Very clear. And last year, inventory kept falling until March 5th. But inventory is 37% lower than it was in January 2020, just pre-pandemic. So in summary, inventory is low. It is not climbing yet for the spring. We have at least one more week of inventory to decline. But if this year starts to look like the pandemic years, then inventory could keep falling through all of February. That would be a surprise, but that's where we are. We can see demand improving as pendings are up 6% week over week. The pendings are those homes in contract but not yet with a closed sale. There are 30% fewer contracts pending than last year at this time, but this gap is narrowing as demand picks up from the ice cold fourth quarter. So a few weeks ago, we had 35% fewer pendings than the year prior. Now only 30% fewer. And this is evidence that people are buying homes this spring. They're not just kicking the tires. With the new pendings, we have only 21% fewer going into contract this week than last year. So 35% fewer pendings a few weeks ago, 30% fewer pendings now, but only 21% fewer new contracts. So that sales gap between this year and last year is definitely narrowing. The last year, the sales rate was so elevated because everybody was rushing to take advantage of the last of the 3% mortgage rates. In this chart, each bar is a week with a total count of homes in contract that week. The light portion of the bar are those newly in contract. So you could call that the sales rate. The sales rates are still much slower than they were last year when rates were at 3.5% and buyers knew it was their last opportunity. But they are ticking up each week, and rather, for example, than ticking down. And so again, if you are a buyer and you've been sitting on the sidelines hoping for carnage in the housing market so that you can swoop in for that great deal, there are just no signs in the data of that happening anywhere. And in response to surprising home buyer interest and tight supply of available inventory, home prices climbed 1.2% this week to just under $415,000. That's not a ton of price strength. It's not skyrocketing. Again, this is not last year, but home prices aren't falling like we were anticipating even like as recently as December. And when we talk about home prices holding up, it's probably best to think about it as sustaining rather than prices rising or falling. The median price of the newly listed homes this week is unchanged from last week at $379,900. That's only a couple percent higher than last year at this time. That's the light red line on this chart. The median price of those 264,000 homes that are in contract, the pendings, the median price of the pendings is just about exactly as it was last year at this time. So like a 0% change. So while we see price stability, the year-over-year comparison is compressing so that the annual price change in home prices for 2023 is flat to down for the year, is really what we're looking at. Even as demand has buoyed things at this point. We haven't revised our price projections up, for example. We can see, though, the demand in the price reductions data as well. Because there are buyers out there and because supply is so limited, the number of homes with price cuts keeps falling. We're down to 33.9% of the active market has had a price cut recently. In this chart, each line is a year. You can see the 2023 line starting at the left end of the chart, and it's on a pretty steep down curve. The trajectory looks more like the pandemic years than pre-pandemic. So in recent years, 2019 had the most price reductions because 2018 was a year of rising mortgage rates. 2019 is the blue line here. You can see that we're kind of aiming there to that levels now. I don't think we'll get under 30% with price cuts, but the conclusion you can draw here is that home buyers don't suddenly have easy pickings. The best properties have multiple offers, and anecdotally, I hear these multiple offers coming in around asking price. These are not bidding wars over asking like last year. Again, it's price stability rather than rising or falling from here. Now, here's a stat I don't often dive into, but it's moving now, and that sheds more light on the market. These are price increases. So these are the homes on the market now that we have seen recently on the market at a lower price. Very often these are fix and flips. This is investor activity or indicative of investor activity. It's iBuyers, that kind of thing. And each line here is a year again. And when this number is higher, we have higher investor activity. We have stronger demand. We have investors in general are very sensitive sellers. So when this number falls, it's because investors see less demand. And you can't keep raising prices in that face of a falling demand. So investors are sensitive that way. And normally about 3% of the market has had a price increase. During the frenzy periods, you can see these huge spikes, 6, 7, 8% of the market being flipped by investors. February of last year, the light red line here, there's an abrupt turn. Investors pulled back, investor buying stopped cold. And you could argue that this stat, percentage of homes on the market with price increases, you could argue that this was the first signal the moment the market turned last year. So we're now seeing price increases rising rapidly from their very, very low levels of the fall. And so the dark red line here at the left end of the chart, see that? That's 2.4% of the market has had price increase recently. That's rising substantially each week now. So keep your eyes on this to understand the sustainability of the spring market. My guess is that if you're working with home buyers and sellers right now, they probably have a very different idea of the housing market this spring than is actually happening. Like, do your potential sellers realize that there are buyers out there? If you need to communicate about your local market to your buyers and sellers, go to altosresearch.com, book a free consult with our team to learn how to interpret the crazy data for the people who need it most right now. They need you to be the expert for them. Join us. Let's get you some data today. Thanks. More next week.